Hey traders, hope you all having an awesome weekend. So an update here on net gas, gold, silver and crude oil. But before that, I want to clarify something here because I get this question asked a lot that Umar, what to expect from the priority group. And I also got this message a lot that I have joined your priority group and now I'm looking forward to get rich. No, this is not the case. I've already made a video about that, what to expect from the priority group right here. You must watch this video before you join the group. But if you're looking for the premium plan, which is a full course, then you already have a video right here, what to expect from the course. And I've already mentioned every single thing here so that you won't get any sort of confusions. Priority group is not a signal group. You get these major area of value every single week for Forex, for commodities, for indices, so that you know where to enter your counter trades. If the price hit the area of value, you prepared to take your buy trade from the support, and if the price hit the area of resistance right here, you know from where you can enter your sell trade. So the goal of the priority group is to show you the area of value so that you won't trade blindly. You just don't sell at the top and buy at the bottom. You know the area of value, you know the supply and demand zone from where you can enter your trade as accurate as possible. With that, you also receive the trade alerts 1 to 4 times a week where you can learn how we enter the trade when the price hit this area of value or when the price is trading in between this area of value, which I call a pullback entry. So these are the only 2 entry I teach in the priority group. If you are looking for the full trading course, full trading system, then for that you have your premium plan here. This is something you need to get. You want to learn the exact rule which I personally use for my trading, and every single thing which I personally know, I have added every single thing in the premium plan. You will learn the exact rule of entering, exiting the trade, different type of strategies with the exact rules. So standard plan is for someone who maybe have a little bit idea of trading and they just want to have an extra confidence what to expect when the price get in the area of value, and what candlestick patterns I look for when I enter my counter trades. An example right here, a pullback entry we took that happened within the area of value right here. We had a stop loss hit as well, so that is why it will give you a very good idea if you need a good confidence, and that is what I'm going to talk about in this first part of the video. Now I want to show you the zones I've sent to the members and the way I took the trade. I entered the trade personally when the price hit the area of value. I'm going to show you 2 Forex zones. I'm going to show you the 2 indices zones as well from where the price reacted nicely. There are a few other zones which I'm still paying attention to take my possible trades. The first one we have Euro USD, a very popular pair, and like I just explained in the first part of the video, when I see a conditions in between the area of value, I go for the pullback condition, pullback entries. And in this case, I've sent this trade alert last week to my members, not the week that has just passed, a week before that. So this was a trade alert I've sent to the members because the price is trading in between the area of value, in between the support and resistance, and we had a good conditions like bearish engulfer. I sent this trade alert to the members, and as you can see, price hit the take profit and then also hit the area of value, which I've already sent to the members, which is right here as you can see on the screen. That price has now hit the area of value, and I'll be looking to enter my buy trades on smaller time frame if we get a condition. Now once we took a trade here with a condition, nice bearish engulfer that happened below 50 EMA. If you follow me, you know how I take my trades, and then the price hit the area of value. What do we have right here? We had a nice bullish engulfing pattern. We had a nice 382 candle followed by a bullish engulfing pattern. So these both are my entry condition. If you would have entered here, that is also fine. If you would have entered at the close, that is also fine. That is also one of the entry pattern I use for my personal trading. Now right here, this is the area from where I'm expecting a good bounce out of, and as you can see, we had a nice bounce of 74 pips where I exit my trade. I've just gone 1.4 to 1 is to reward ratio of fixed target, and as you can see, the price hit my take profit and then it fall back down, and I knew that there are some major news events coming up. That's why I used a fixed target and I was not managing this trade. The only time when I manage my trades is when the price is trending up nicely, something like this, and when the price hit the counter trading zone, either I just push my stop loss to break even and move my take profit further above. In that case, you would be out at break even, or with a fixed target you will secure some profit. So that is how we enter the trade. That is how we use our hard-earned money to gain some money out of the financial market. So rules are very important. Without rules, you are just gambling. I say that in every single video. A good example of sell trade here, and then when the price hit the area of value, took a buy trade. Imagine you don't know the rules. Imagine you don't know this area of value. You enter your sell trade here and hoping that price will fall, and you just don't take your profits. And what do you see here? Right here, the price pushed up, and that would be a moment of panic and lots of stress, even though the price fallen after so many days. And these are just the 4-hour candles, and imagine if you don't take your profits and losses in time, that is just a stress, and you won't be able to take the other trades. So this was one of the pair I've sent the members with a nice take profit. I did not send this as a trade alert right here, but I've sent these zone to my members. That is what I want you guys to learn. Look at the patterns and learn from it so that you can take your trades as efficient as possible. Right here, the next one we have Euro Cat. This was the pair I've sent to the members. I've informed them that once the price hit the area of value, you're going to enter our trade with one of the entry conditions. In this case, you'll see a nice double bottom confirmation with this nice 382 candle. Let me zoom this up for you. Right here, that happened on 1 hour time frame, and if you know me, I take my double tops, double bottom mostly on 1 hour and 4 hour, and pullback trades on 4 hour time frame only. So a very good trade right here. I've sent these zones to members, and we had a confirmation, and right here 1.4 to 1 risk to reward ratio was my take profit. The fixed target I've used, and it can still push up, but I've taken my profit at the fixed target. So that is how you take your trades with condition. And like I said, I send these zones to the members so that you know that these are the area I'm personally paying attention, and most of the times I've seen that 90 to 95% of the times the price reacted nicely out of the zones I send to the members. If not, it just breaks below or breaks above without giving any sort of entry condition, and if there is, of course, we have a stop loss there to protect our account. I'm going to show you 2 indices trade as well, and this is a very important point here I'm going to tell you, because when I see a double tops, double bottom patterns, I sometimes use fixed target. So a very good example here on indices only. Forex is totally different. I use ATR exactly for the Forex, but when I trade on the zones, there is some discretion I use with my experience. So a very good example here, I've sent these zones to the members right here. As you can see, the S&P 500, I've already mentioned these zones to the members. So if the price hit the area of value, I'll be looking to enter my sell trade. And if you see this nice bearish engulfer right here, the ATR of this candle is 13 points, and right here in the ATR above, and price did push down 14 points, and then price quickly shoots back up. Now if you say, oh my, that also looks like a double top pattern. No, it's not. If you see here, the candlestick has closed above my pattern. That invalidates the rules, and that is a signal that price wants to push up in a trend likely. So that is what has happened right here. We enter the trade here, and a good example of using the ATR for your target. Now I want to show you where I did not use the ATR right here. So when I see a good double tops or double bottom pattern, I use fixed target, and I keep my stop loss above the rejection area, and then I go 1.4 to 1 risk to reward ratio most of the time if I'm not using the ATR. So in this case, if you see here, ATR of this entry candle is 53, and if you go 53 points above, and you see, you will have a very big stop loss, and then you will have a very big take profit, which I was not comfortable using. So instead of that, I used fixed target, and I kept my stop loss above the wick, above this rejection zone of the double top pattern, a nice double top confirmation, rejection, and I kept my stop loss above that. And as you can see, 1.421 was my target. Right, as you can see, I've already sent these zones to the members, informing that we can get a possible entry within this area of value and a nice winning trade of 1.4 to 1 risk to reward ratio. So that is how I teach my students here in the priority group. And if, of course, if you are my student in the MMTA course, you don't even have to wait for my signal. You know every single rule which I personally use, and I'll be uploading new strategies there very soon. I got really busy in last couple of months. That is why I couldn't upload a strategy. I remember I've said that. I have my 2 strategies ready to upload in the MMTA course, which you're going to see in your strategy section of the course. So hang in there, I'll upload that very soon. So right here, a very good example here. So that is how we take our trades with conditions and with confluences. And we also had 2 stop loss hit in the priority group. These are the only trade alerts I've sent to the members. 2 cents. It might hit your take profit here. If that totally depends on your spread. That was a heartbreaker trade right here. It was just a pip away right here, and price has fallen down. So that is what I want to show you. I hope you got a value out of this. If yes, hit a like button for me, hit a subscribe button if you're new, and join Money Markers family. Now before I end this section, when I took this trade, I looked for few factors. If you remember my last weekend's video, the factor number 1, the price hit the area of value. The factor number 2, the price was also in the oversold situation, and price just came out of the oversold condition with this nice bullish engulfer. That is my confluence number 2. With that, we had a bullish engulfer, we had the oversold situation, and we had the price hit the area of value. So that is how the signal creates. It is not a piece of cake when you are investing your hard-earned money. You need to understand that if you are trading with your hard-earned money, you are not throwing this money or donating this money in the market. Look for this confluence before you hit a buy or sell button, and then if it hits your stop loss, that's fine. Out of 10 times, I'm sure if you follow your rules, you'll come out as a winner if you use a correct stops and target and follow a good risk management. And as you can see, a good example of a winning trade and then price fall back down. So with that being said, let's quickly start with analysis, starting with nat gas, gold, silver, and crude oil. So what do we have right here? So since last week, the price has broken below this consolidation and then it fall back to the level of support. Now let's do it on Oanda first, because the support area is a little bit below, and I want you guys to have these zones on your chart, which is 2.375 goes to 2.493. This is an area from where I'll be looking to enter my buy trades again, and as you can see, the price is just ranging within this area. It hit the zone, pushed up, it hit the upper level of the zone and then pushed down, and that has been happening for last couple of weeks. Price is just ranging in between this area of value. So that is what I'm looking at for now. Have these zones on the charts, and as you can see, the price is rejecting from the 50 EMA on 4-hour time frame. So now if the price pushes down, and as you can see, the price is still in an uptrend. If you look at on daily time frame, price is still intact in a trend and is still trading above 50 EMA on a daily time frame, and it is in an uptrend on bigger time frame. So since the price bounced up from this area of value, we had a big pullback on daily time frame, and since the price broke above 50 EMA, and since then the price is trading above that. Now if you see, the price is ranging in between the support and resistance area, bouncing up and down from this area of value. So that is why I'm just trying to take an advantage of little scalp of buy and sell trades on smaller time frame. So as you can see, on 4-hour time frame, the price is below 50 EMA. That is why I'll be looking to sell if we have a reason to enter, or buy if we have a reason to enter trade. But overall, my bias is bullish as long as the price is above 50 EMA on daily time frame, and once we had a breakout above, then in that case we have a very likely chance that gas will push up hard. If we have a breakout below this area of value, then we have a very likely chance we can have a push down hard towards the next level of major support. So that is why make sure you set your stops and targets both in case of dramatic push up or down. So that is why I'm very cautious here to take my trades, and I'll be only looking to enter my trades with smaller targets. I won't be managing my short trades. If I get a sell condition, I will not manage it. I will take my profit and wait for the next condition. For now, if I see another candle and then bearish candle here, then I will go short till this area of value. Means I will only use 1 ATR for my target. If you hover over the candle, ATR is coming up as 4, so 4 points will be your take profit or stop loss. So that is what I'm looking at this point. I will only look for buy trades once the price give us a pullback followed by bullish engulfer, and I will only go long till the price hit the zone above. In case you missed this zone, it is right here with a little bit of adjustment, which is 2.758 goes to 2.849, a zone from where I'm expecting a very good push down. Just a pullback. It can be a pullback. Again, remember, when the price started its uptrend and hit the area of value, it can give you a pullback from the area of value that is enough to hit your targets if you're not managing it, and then it can again shoot up and continue to push up in a trend. So that is why take your profits and losses in time is very important. So again, if we get a very nice bearish engulfer, a next candle, then in that case we have a sell signal and buy only when the price hit this zone below in green right here, which is 2.375 goes to 2.493. Once the price hit this zone, I look for a condition like bullish engulfers, double bottom, or if we get a reason like 382 candle or a pin bar, in that case I will go long again. So only wait for the conditions. The next pullback trade is right here if we have a good signal here, or if the price make a new low which is breaks below this previous low right here. If you have a break below this low, then we get a pullback followed by bearish engulfer. If that happens, I'm gonna go short again. If you are confused, don't worry, I'm gonna update you guys on Monday as well, and every single day if you follow me, so that I'll keep you updated with the moves of natural gas and the other commodities. So keep an eye here. For now, just look for sell conditions till the price hit the area of value. Now here on capital.com, as you can see, the price bounced up from the zone here and then rejected again. So we can still get a rejection here if we have a double bottom pattern, a clear double bottom with a bullish engulfer or a nice 3-8 candle. In that case, we have a good buy signal. If that happens, we are good to go long. The zone below is 2.478, goes up to 2.561, from where we are going to enter of a buy trade. Again, remember, with conditions like double bottom, rejected from this yellow box right here if you see, or 382 candle, and that must not close below this rejection box. If we have a candle push down close below this rejection box, in that case the price can still fall down to the lower level of this support, and then we might get a signal again. Remember, the price is still above 50 EMA on a daily time frame, and I will only look for short-term short trades, short-term sell trades if I have a next candle as a bearish engulfer, or if you have a break below this previous low, then I will look for the pullback bearish engulfer and still go short. So I look for the conditions accordingly and keep you guys updated as well. So keep an eye here. Price is now pushing down and we do not have any sort of trend, so all we need to see a good condition to enter, sell or buy trade with conditions only. The next one we have gold. So if you remember my last video, I've marked the Fibonacci level right here. The price has now hit the level of 50% retracement and this buffer zone. If you follow me from a couple of years, you know my buffer zone is from 25% retracement to 50% retracement. For aggressive traders, we look for an entry right at the 50% retracement, and as you can see, the rejection is forming with this red candle, and now we can still get one green and a big red candle here. If that happens, we have a very good sell signal and price can fall. So only look for sell trades. If you are an aggressive trader, that is an entry already. Targets will be 1 ATR, and ATR as at that time is $8, so $8 will be your stop loss. The $8 will be your take profit. If you want to manage it till 1.618 retracement. For less aggressive traders, wait for a pullback followed by bearish engulfer and then go 1 ATR for your targets. For now, I'm just paying attention to sell trades, and the next zone to enter buy trades is right below in blue. As you can see the numbers here, from where I'm going to enter my buy trades. So buy only from this area of value right here in green, or if you have a dramatic push up, break above this previous high, then it will likely push up to the next level of major resistance. Right here on silver is exactly same as gold. Below 50 EMA we can get a push up followed by bearish engulfer, and then price can still push down. Not buying silver as long as we are below 50 EMA. Buy only if we have a complete break above 50 EMA and this previous high right here, and then price can likely shoot up to the next level of major resistance. And as you can see right here, silver is also above 50 EMA, same like gold. It is also above 50 EMA in between the zone. That is why it's in between the decision zones. We are only going to take some short-term trades, short-term sell trades if we have a signal. So only look for bearish trade if we have a bearish engulfer below 50 EMA. Next one we have crude oil. Crude oil is pushing nicely. If you remember my last video, I've said that we can now get a very nice pullback, and as you can see we had a nice pullback, and if you say it is a valid bullish engulfer, it is not a valid signal for an entry. That was a valid signal for an entry in case you're wondering, but I'm still expecting a good push up till this zone above, which I'm paying attention for my personal trades as well. Once the price hit the zone above, which is 81.37, goes up to 83.22, this is the zone from where I want to enter my sell trade with bearish engulfers. Double top confirmation or 382 candle is also one of my entry conditions. Look for your bearish engulfers on 4-hour time frame, and look for your double tops, double bottoms on 1-hour and 4-hour time frame. So that is it for commodities, guys. I hope you're getting value out of my videos. If yes, do not forget to hit a like button. For me, it really helps me in a YouTube algorithm. Hope you trade green rest of the week. See you guys in the next video. Have an awesome weekend. Take care.